Hi friends, welcome back to my YouTube channel Gold, the Real Money. In this video, we will discuss the concept of gold pledging, specifically in relation to buying sovereign gold bonds. We will explain how this process works and how it can be used to increase profits for gold investors. We will also cover the benefits and potential risks associated with gold pledging and sovereign gold bonds. The video will be aimed at providing a comprehensive understanding of this investment strategy for those who are interested in the gold market. Before starting the topic, please make sure to like this video, subscribe, hit the bell notification down below, and share among your friends and relatives. The process of pledging gold to buy sovereign gold bonds typically involves depositing physical gold with a designated bank. The depositary will then issue a receipt for the gold, which can be used to purchase sovereign gold bonds. The bonds are issued by the government and pay interest based on the price of gold. By pledging gold, investors can gain exposure to the gold market without having to physically hold the metal. This process can be useful for those who want to increase their profits by investing in the gold market while also earning interest on their investment. The advantages of using gold pledged to buy sovereign gold bonds include: lower risk. Pledging gold to buy sovereign gold bonds reduces the risk of holding physical gold and also provides a higher return than physical gold. Liquidity. Sovereign gold bonds are traded on stock exchanges, providing investors with the ability to easily buy and sell them. Tax benefits. Sovereign gold bonds offer tax benefits to investors and are eligible for long-term capital gains tax exemptions. Government backing. Sovereign gold bonds are issued by the government, providing a higher level of security for investors. Diversification. Investing in sovereign gold bonds through gold pledging can help diversify an investment portfolio. Convenience. Pledging gold to buy sovereign gold bonds eliminates the need for storage and security concerns of physical gold. Low investment. The investment required to buy sovereign gold bond is low as compared to buying physical gold. Interest income. Investors get an additional interest income on their investment in sovereign gold bonds. When using gold pledged to buy sovereign gold bonds, it is important to consider the potential risks and drawbacks of this investment strategy. One risk is that the price of gold may fluctuate, which can impact the value of your investment. Additionally, if you pledge your gold as collateral for a loan, you may be at risk of losing your gold if you are unable to repay the loan. Additionally, sovereign gold bonds may have a lock-in period, which means you will not be able to sell or redeem the bonds during that time. Thanks for watching. Please make sure to like this video, subscribe, hit the bell notification down below, and share among your friends and relatives.